Do you dream of financial freedom, but find yourself trapped in the 9-to-5 grind? Here's a hard truth. Working for someone else will rarely, if ever, make you truly rich. It's a system designed to reward owners and shareholders, not employees. So, why are so many people stuck in this cycle? In this video, we're going to explore the stark realities of employment, how it limits your financial growth, and why entrepreneurship, investments, and ownership are the true paths to wealth. Stick around as we uncover actionable strategies to reclaim your time, multiply your income streams, and start building wealth on your terms. If you've ever felt there must be more to life than a paycheck, this is your wake-up call. Let's dive in. Number 1. The reality of employment: trading time for money. In traditional employment, your most valuable resource, your time, is exchanged for a paycheck. It may seem like a secure and reliable way to earn, but this model has significant limitations. Whether you're a salaried employee or an hourly worker, your income is largely capped by the number of hours you can work. Even if you work overtime, you're still restricted by the number of hours in a day and your physical capacity to perform. The key issue here is that your income is not tied to the value you provide or the wealth you generate for your employer, but rather the time you spend working. No matter how skilled or productive you are, you're still dependent on a fixed wage, which means your potential for financial growth is restricted. Moreover, working for someone else means you don't have control over your financial destiny. Your employer dictates the terms of your pay and benefits, and raises or promotions are often influenced by office politics, economic conditions, or company goals. Without a scalable source of income, you remain locked in a cycle where you're working harder and harder without necessarily seeing proportional financial rewards. This is where true wealth creation through entrepreneurship or investing offers a more promising future. Number 2. Why job security can be a double-edged sword. Job security is often seen as one of the most desirable aspects of traditional employment. The idea of a steady paycheck, benefits, and a predictable future brings peace of mind. However, this sense of security can, ironically, be a double-edged sword. The comfort that comes with knowing your job is safe may prevent you from seeking out other, potentially more lucrative opportunities. You might become complacent, staying in the same role or company for years because you feel protected, even when your true earning potential could be far higher elsewhere. Moreover, job security often means you are at the mercy of your employer's decisions. Companies restructure, downsize, or undergo changes that can suddenly threaten the stability you once took for granted. In fact, in 2020, a study by the Bureau of Labor Statistics showed that the average worker changes jobs 12 times in their career. Even highly secure positions can vanish due to shifts in the market, technology, or global crises. Finally, job security can lead to a false sense of safety, keeping you from taking risks that could lead to substantial rewards. The lack of financial freedom can prevent you from investing, starting your own business, or creating other income streams. In the end, what feels like security may actually be limiting your potential for wealth creation. Number 3. The time trap: when your schedule isn't yours. One of the most significant downsides of working for someone else is the loss of control over your own time. When you're employed, your schedule is largely dictated by the employer, whether that's a 9-to-5, a shift-based schedule, or any other fixed hours. This lack of flexibility means you must sacrifice personal time to accommodate the demands of your job. In fact, according to a 2021 study by Gallup, 53% of full-time workers in the US say they work more than 40 hours a week, and this is increasingly common in industries where overtime is expected. This means that for many people, evenings and weekends aren't truly their own. What's even more concerning is the way a lack of control over your time can impact your well-being. According to research by the World Health Organization, long working hours and job stress can lead to burnout, anxiety, and even serious health issues. When you're always working on someone else's clock, you have limited opportunities to focus on personal development, family, hobbies, or your own business ideas. This time trap creates a cycle where you become dependent on your paycheck without having the freedom to make meaningful decisions about how you spend your days. While employees may get vacations or paid time off, the ability to fully disconnect or invest time in other ventures is often restricted, leaving you with little room to grow outside of the job. Number 4. Limited growth The income ceiling of employment. One of the biggest challenges of working for someone else is the income ceiling, the limit on how much you can earn. Unlike entrepreneurs or business owners, employees often face salary caps that are based on company structures, roles, and budgets. While raises and promotions can happen, they are typically incremental and may not keep pace with inflation or personal financial goals. A study by Glassdoor revealed that only 30% of workers received a raise in the past year, and those raises often don't reflect the true value of a person's skills or contributions. Even in higher-paying professions, income growth can be slow, and many employees find themselves stuck at the same salary level for years. In contrast, business owners, investors, and entrepreneurs have the opportunity to scale their earnings significantly, often exponentially, through expanding their businesses, investing, or pursuing multiple revenue streams. This limitation on income in employment is a primary reason why financial independence can be hard to achieve. Number 5. The tax advantage of ownership. Did you know the tax system often works against employees? As an employee, you're taxed on your income before you even see it. Entrepreneurs and investors, however, can deduct expenses, reinvest profits, and often pay lower tax rates on capital gains. For example, a business owner can deduct costs like travel, equipment, and even a home office. These deductions reduce taxable income, leaving more money for growth. Employees, on the other hand, are taxed at the source with few opportunities for deductions. By shifting your mindset from earning to owning, you can take advantage of these tax benefits and keep more of what you earn. Number 6. The power of side hustles, your gateway to independence. If leaving your job feels like a leap too far, consider starting a side hustle. Many successful entrepreneurs began their journeys while still employed. Whether it's freelancing, dropshipping, or creating digital products, a side hustle lets you test the waters of entrepreneurship without risking your main income source. Over time, your side hustle can grow into a full-time business, giving you the freedom to leave the 9-to-5 grind behind. The key is to choose something scalable, something that can generate income without requiring all your time. This could be anything from affiliate marketing to selling online courses. Number 7. Investing, making your money work for you. One of the most powerful ways to build wealth is through investing. Unlike a job, where you trade time for money, investments allow your money to grow while you sleep. From stocks and real estate to mutual funds and cryptocurrencies, the options are endless. The earlier you start, the more time your investments have to grow through compound interest. For example, investing $500 a month at an average return of 8% can grow to over $1 million in 30 years. Compare that to saving the same amount in a bank account, earning minimal interest. It's clear which path leads to wealth. Number 8. Ownership, the key to true wealth. Ownership is the ultimate wealth builder. Whether it's owning a business, property, or intellectual assets, owning something that generates income puts you in control of your financial future. Entrepreneurs and investors don't rely on a single paycheck. They create assets that work for them, whether it's a rental property generating monthly income or a business scaling to new heights. Start small if needed. Buy stocks, invest in real estate, or launch a side business. Over time, these assets can replace your salary and give you the financial freedom to live on your terms. Number 9. Building multiple income streams. Diversify for success. Relying on a single source of income is risky. If that income dries up, you're left vulnerable. Wealthy individuals diversify their income streams to ensure stability and growth. You can start by adding one new stream, such as dividends from stocks, royalties from creative work, or income from an online business. Gradually, you can build multiple streams that work together to create financial security. Number 10. Changing your mindset, from employee to entrepreneur. The journey to wealth begins in your mind. Breaking free from the cycle of working for someone else requires a shift in how you think about time, money, and risk. Stop seeing your paycheck as the only way to earn. Start looking for opportunities to grow, whether it's through investing, building a business, or learning a new skill. The road to financial freedom isn't easy, but it's worth every step. Take control of your financial destiny. It's time to break free from the limits of traditional employment. By understanding the flaws in the system, starting side hustles, investing, and embracing ownership, you can create a life where financial freedom is more than just a dream. It's your reality. What's your first step toward breaking the cycle? Let us know in the comments below. Don't forget to like, share, and subscribe for more insights on building wealth and living life on your terms.